Holy crap, man. I always try to get this like to a spot where like the market's not exploding in my face. And I swear, like the second I got into the studio, it's like, oh my God. Hopefully you guys can hear me. Just do an audio check if you can. Um, check audio. And I had a buddy who may come in, may not. We'll see. I know Sharky was going to jump in, but we just got a big old move. Beautiful. Big old move in the market. Just kind of like squeezy. So one thing I'll say before we jump in, the market's at a spot where we are. If you guys don't know what a 200-day moving average is, SPY is sitting on its 200-day moving average, and we get super choppy. So this is normal. It's like impulse up, impulse down, all over the place. I got a couple things today. Let's see. Looks like, yeah, I'm gonna go ahead and move forward. I don't know if I'm gonna wait for Sharky because he's probably trading. If I have an inkling here, that was a big move. So, anyways, what are we going to do? We have a huge week this week. So first of all, let me just bring this chat down. If you guys have anything, I'll bring it up onto the stage and we can check it out. If you have tickers that you want to look at, go ahead and send it also. But I appreciate all you guys hopping in. Let me see if I can get a look at Twitter really quick, just in case. And yeah, we are good. A handful of you guys. Hopefully I don't get a lot of echo. If I'm going to see if I can maybe see, it's really hard if I can see any comments on Twitter, but I know, yeah, I love this. The graphics team is amazing. I have the best ever. So I totally appreciate the guys put this stuff together. I'm not that artistic. But anyways, so every Monday, if you're new, again, what we do here is we just kind of like go over what were the major headlines last week. And what are we looking for this week moving forward? It's a huge, it's a huge week on for earnings this week. So major moving events. In terms of headlines, it's not really a whole lot. So I'm going to go ahead and jump into this. Hopefully the market doesn't just continue to explode to the upside. If so, we'll see. I got a couple trades that we can go through, a handful of setups, but let's go ahead and kick it off with some major headlines over the weekend. So we still have a lot of geopolitical risks kind of looming. So I want to be aware, hey, a lot of things look like we were coming into the lows last week. And if you saw gold was yeah, coin ripping. Yeah, coin was definitely a nice Monday mover. Oh, look at that. I got Sharky in here too. What's up, man? Did you catch that ripper just now? I was looking at that. I was like, there's no way he's coming because that was just like a huge impulse to the upside on SPY.
Oh yeah, no, I got out of my my longs and I tried a little short. Obviously, it didn't work. I'm out. And
Nice.
probably be done for the day.
All good, man. I don't have. I'm supposed to be able to have, for whatever reason, I'll have to ask my guys, but I don't have your handle. It's supposed to say at Shark. What's your hand? What's your Twitter, Sharky?
At Shark Trader _
At Shark Trader. Anyways, it should
maybe
say it under our captions. But anyways, Sharky is my buddy. We are on Spaces almost every day. I don't do the Spaces on Mondays because you guys know I'm doing this and a lot of the weekly prep. But yeah, definite staple out there. Love this guy. Amazing trader. Vaping constantly like the rest of us. It must be a trader thing. I don't know. But anyways, yeah, just wanted to go through. Really haven't gotten a whole lot. So geopolitical concerns still on deck. I want to watch a couple things. So that's going to be a mover in terms of gold and oil. So there's just two things to watch. If you see either one of those kind of ripping, then it's maybe like a little bit of a pause for concern. Nothing major, but possible trades as well as we move forward. I think both of these commodities are in decent pullbacks. As to be expected. I don't think that they're gonna, run away from anybody anytime soon. But definitely something to watch as the rest of the market starts moving. little headlines on the House Speaker deadlocks. I don't know how much that's really going to impact markets, so I wouldn't pay too much attention to that. Just as an aside,
Yeah,
but
I don't think much.
what's that?
I don't think much either.
Yeah, I mean, the good thing is if they're in a deadlock, then well, they're not spending money, so that's good. That's good
There you
for
go.
inflation.
Yeah.
I think the biggest news, I mean, Ball Shark and I were kind of going back and forth. Saw this. The biggest news really was Ackman covering his TLT short, right? And I mean, if you guys remember, this was probably one of the biggest. This guy makes a handful of amazing calls every year, right? And it was, I don't know where he went short, but he was very loud about his position, and he was right? Like, he was really right. And today there were some articles released that he actually covered his shorts as we're getting these headlines that the 10 years actually hitting a 5% yield for the first time since I can't even remember.
No, I think it was 2007.
Yeah. Okay. Sounds about right. So like 15 years, we haven't been this high in terms of rates, right? At least on the 10-year. And you can look at that. You can see that in TLT, a pretty big bounce today. That's moving the markets. 200-day on SPY is what we're just breaking back over. But again, it gets really choppy. You can also see a lot of this in the Dixie or DXY. So two other charts that we've been watching just in terms of confluence are the dollar index and TLT, just in terms of the bonds. And some of the biggest movers last week were the 20-year bond, and the week before were the 30-year bond, where we just had like no bids and major sell-offs. So we'll see how the market digests this. What I'd say is, as we move forward, it's encouraging. It's definitely encouraging, but I don't know, I would like to see a little bit more basing kind of price action where we stabilize around that 420-ish level. We just tagged 424, almost 425, man.
Yeah.
So that's a huge move. My gut is telling me that might be like a weekly move that I just missed in a quick session. A couple other headlines, just M&A in the oil space. CVX buying Hess for a $53 billion all stock deal. Both of those, Hess was down for a little bit. It's not really a benefit to shareholders. They're just going to get like, I think it's like 1.2 something shares of CVX for every share of Hess. But yeah, pretty light week overall. Sharky, again, jump in if you have any headlines. I'm just going to hit the data points really quick.
Yeah.
So a couple of things, major movers or major things that were definitely far away from what was anticipated or expected. So New York State manufacturing index came in a little bit lower. Previous was 1.9, but consensus was actually to be worse than they actually were. Retail sales month over month. This was a big one. So retail sales came in almost over double what the expected. Hold on, I gotta edit a position here. About double what was expected. Wait 1 second. And that was actually a big one, and it's kind of confusing. Retail sales is one of those where we're gonna have people spending a lot more money. So we had that non-farm payroll number earlier in the month, and it was a huge outlier in terms of like significantly higher than what was anticipated, and it looked like a lot of second jobs were being taken. Sorry, I have like a couple other screens off to the side. And at the same time, it's like, okay, well, what are they doing with that extra money? And so if they have more jobs or they're taking more jobs, we know that they're making more money. So then we want to see, are they actually spending that money? And the retail sales numbers coming in over double what was consensus. That is okay. Yeah, they're spending the money.
Yeah. It was interesting to see that.
Yeah, we have some credit card companies coming in too later this week. We have Visa. I think we just had American Express. So an interesting, like, kind of like, if you want to correlate things, like what's the debt look like? Are they charging off things? I mean, the credit card companies in the short term are probably going to say, oh, we have all this extra interest profit that we're going to get. But I think the real concern is, do people pay it, or are they going to have to charge it off? So we'll see. Housing, building permits and housing starts, really not market moving events, have not been for a while. Pretty much in line, slightly lower on the housing starts and existing home sales. And then this is last Friday's budget statement came in down. what is that, negative 171 billion versus it's almost $100 billion difference. And one of the things is like with these super high interest rates, the tough thing is like, the government has to issue more and more debt because they're paying higher interest rates on the debt that they're issuing, which is the bonds, right? And it's kind of like this vicious cycle right now. So interest rates are still going to be a serious catalyst. I think the headline about Ackman covering the short clearly to me is having a pretty heavy impact on the market. Do you know if he said he's covered the full?
Yeah, I think he covered the full position, and it definitely is helping rally the market. But and we kind of talk about this before. A lot of times, you're also going to see kind of news events happen at key areas, and I mean, obviously, Ackman's not a dummy. He sees these key areas on the markets as well. So
Yeah.
it kind of all lined up. Besides the fact that we had 3 days red in a row, and statistically speaking, the more probable scenario, now of course it's more probable and nothing's 100% in the market, but that we were going to see some type of a green day today and kind of punish late shorts that were maybe even getting in today on a gap down. So
Yeah,
all
actually,
the stars really aligned.
shocked.
Yeah, all
I
the
was
stars.
shocked to see it red open, to be fair. Right?
Yeah.
I was like, is this happening? Like, can we just
Well,
immediately flush?
I think, well, maybe we said it on Thursday, but I think even on Friday we mentioned something about a possible gap down, kind of a fake break,
Yeah.
and then recapture that 420 area. Yesterday's close as well, and then it was off to the races. So all the stars really aligned for some type of a technical bounce today, and obviously the $64,000 question is how high is it going to go in this prevailing downtrend? But
Not gonna lie, Sharky, I started to put a little bit of my shorts back on
right.
today.
No, I mean, you're not wrong. You're not wrong.
I don't know yet. We'll see, right? Like I
Yeah.
am wrong actually on a
Well,
couple things.
depending on what time you did it,
Yeah.
but
It's funny too. Like,
but working into a position makes sense.
Yeah,
I mean,
yeah.
we might get a little bit more. Luckily, we do have a Fed blackout period now, so I think that's
do.
worth mentioning.
Finally,
Yeah. After we ran the gauntlet yesterday, right?
What's that?
After we ran the gauntlet last week.
Oh man, yeah. So we got the beige book last week also, right? And then we got a Powell speech like later on in the week. And I'm gonna pull up what's on deck this week. Believe it or not, if you thought that you were out of the woods from Powell speeches, guess again, because we got another one coming up in midweek. Hard to believe.
Oh, I didn't see that on MarketWatch. All right.
Yeah. So next Wednesday, actually, let me just go ahead and scroll forward. So next Wednesday, we don't have a whole lot.
Oh, next week. Oh, yeah, not this week. Next week.
No, this week, Wednesday. Let me make sure. I have it as this week. So this is going to be Fed Bar Waller. So we get GDP. Yeah, man. The 25th October. That's this Wednesday.
That is true.
He's up. So,
that's interesting.
Yeah, take it for what it is. Sorry to be the bearer of bad news, but he sneaks on those calendar schedules, man. Let me tell you.
What the hell? Yeah.
But yeah, I would, this time of day, it's pretty choppy. We had a huge impulse up. We're going to pull back a little bit, kind of retest that 200 day. I'd say for any new traders too, by the way, this is a time, this is a level. When anything gets close to their 200-day moving averages, I'll tell you, Tesla's sitting on it right now. SPY is sitting on it right now. Things can get really wonky. So probably a good time to sit back, relax, and see where it goes before you really start jumping in. I talked about, re-entering some shorts earlier and being wrong. I might not be wrong in the direction, but when it comes to trading, if you're wrong in timing, then you're just wrong. So that's also true, right? Like we have to kind of keep that in check. But yeah, it's not a spot really to be really pressing a ton of bets. What I'd say for the 200-day simple moving averages, they're like magnets, right? Like some of my NFP levels, they can be really sticky, and things can chop around significantly. It's like a magnet. If it pulls the chart towards it, and it'll pop just a little bit through, goes too far, then pulls it right back and then all the way back down. You'll
Mhm.
see some serious reversals just like that on a very, very, very regular basis. I have a couple setups this week that I want to go over. I think, earnings is going to be a big, giant catalyst. I've actually already found some options that are underpriced, you guys. Like, I didn't think I was going to see them right away, but I am finding options that you could buy that are significantly underpriced right now. But that said, a lot of the gap down, I think today was on GDP headlines. So I don't know if everybody's familiar with what the impact of GDP is. And when we were going, remember this good news is bad news, bad news is good news. What Powell said last week on his speech is that he's been saying over and over and over is that he needs to see a period of sustained lower than average growth, right, for inflation to come down. And, in the beginning half of this year, we had GDP forecasted to be negative this quarter and next quarter. And the first look at GDP that I'm seeing coming in, we get, I think it's three looks of GDP every quarter. And Thursday, we're going to get the first look, and it'll come in 3 times. But the consensus is sitting at 4.3% positive. So normalized GDP is like 2%. The consensus right now is looking at positive 4.3, which is over double normal. And if we do have a significantly higher growth than anticipated, well, that's really tough on inflation. So rates and all that stuff still very much in focus. Looking at the market right now, pulling back just a little bit. This is exactly what we're talking about. Getting a little choppy out there for sure. I got some setups for the back half of the week that I'm kind of getting excited for. I haven't closed anything, you guys. Unfortunately, if you're in the servers, I had 2 trades I was looking at. One was Tesla long, right off of that like 200 week around 203, and the other was Nvidia short. I didn't send the Tesla long because it started moving too fast. That thing just ripped. But anyways, I had like 220-ish, 225 as the upside target. And that's, again, it's tagging its 200-day right now. I would be like full close there. Nvidia went opposite. Probably a couple more setups that are still playing out for sure. All right. So again, Monday, Tuesday, really nothing major on the economic calendar. Wednesday, we do get Powell's speech. That's going to come in what time? 1:30. 1:30 Pacific. So that's actually after market close. So
see, there you go.
Yeah. So this Powell speech, let's go ahead and edit that. So nothing during market hours. You have the oil status report on every Wednesday. We have a 5-year and a 2-year auction. Oh God, I don't know if you notice how many T-bill and bond auctions we have this week, but it's more liquidity going into the market in terms of them having issued debt. And
James Bond.
Yeah, it's going to get interesting. We'll have to see how those auctions turn out, but
Okay,
I
I've
don't
done that on
expect them to be that big market moving events, but it's possible. So I want to keep that stuff on my radar for sure for right now. So let me I'll just so you guys see what I'm looking at. So we have a 17-week bill auction here. New home sales, nothing major. This is tomorrow. So PMI flashes. This is just like anything over 50. We're an expansion. 2-year note auction tomorrow. New home sales, not market moving event. All of this is the oil status report. Then 17-week T-bill, 5-year note, Powell speech, post market. So I expect some volatility after the market on Wednesday. And then this, to me, this is the bigger one. This is one of the bigger ones. So GDP, first look right now. This is what I was talking about. The consensus 4%. This is from a lot of that beige book that was turned in last week. All the Fed presidents kind of get together. They put their report together for their respective areas and what they think they need in terms of help from the Fed and monetary policy. Consensus coming in at 4.3%. That's wild to me. Just to think that we weren't negative. Here, I'll just show you this. But it wasn't that long ago. We were forecasting negative 2%, right? Like it, and now to be on pace for at least forecasting that high. I don't know if this is way high and the actual number comes in below 2%. then I think that's good for markets. I'd be looking at that kind of stuff for sure. And Powell's absolutely going to address that forecast. I would hope that he addresses that forecast. After that, we go down to Friday. So Friday, we actually have PCE. So again, if NFP is how many jobs are being taken, then, do you have money? We have retail sales. Are they spending? The real metric that the Fed is watching is PCE, and that's personal consumption expenditures. How much am I actually expending? How much am I spending month over month? Is it higher or lower? So the consensus right now is at 0.3%, prior at 0.1%. If this comes in and it's at like 0.1%, that's probably going to be pretty bullish for the market overall. But if it's anything higher than 0.3%, that's going to be a rough one for sure. And then the analysts are going to come in and start looking at. Did we just reverse the whole thing? Yeah, the analysts are going to come in and start looking at what is the hourly earnings looking like, and are wages actually super sticky or not? So I would just be aware of some of that stuff. Here, let me move some of these off the screen. Cool. And then Friday we also get consumer sentiment too. So really quick, jumping into earnings here. So far we've had 8 of the major Dow 30 components report, 7 of which have actually beat. Only one, Travelers, has missed. This week we have, I believe, is the busiest day of earnings season, which, by the way, historically speaking, is a pretty choppy week. This week and next week, just whenever we have the major, let's call it
all the big names.
Yeah, when you have the big mega cap names all reporting at once, you definitely get some chop, right? You'll start to see people moving funds around from sector to sector. If they were short financials last week, they might be covering those short. You might see a little pop in something like a JP Morgan or something like that this week, and then moving into some of the industrials. Boeing is a really interesting one to me right now. So Boeing coming in on Wednesday, but this is
that that's after hours, or is that pre-market?
Yeah, so here's the calendar, right? So Boeing is going to be in the pre-market.
Yeah. A lot of the Dow names are in the pre-market.
Yeah, per this is just earnings whispers, guys. I will say there's a lot of calendars out there. This is the one that everybody uses, so I just put this up there. It is not the most accurate one out there. The only way to verify that your company that you're looking for is definitively going to report, you have to go Google the ticker and then space investor relations and go to their actual website. That's the only way that you're going to get stuff verified, because these companies will put out what their release dates are. They'll send it out to the exchanges, to whoever, people will grab it, and they might change it, right? So don't expect these to be like set in stone. Things like this change all the time. It's totally a normal thing. So just a heads up. Always trust, but verify. So I think where we at, right? So tomorrow morning, I have a position in GE. I've had a position in GE. I'm probably not going to touch this. I don't think that they're going to have anything major unless, they start talking about the next wave of spinoffs. They're spinning off the aviation group. And, what I'd say is, in terms of companies that don't typically make huge moves, especially since a lot of people watching here are probably earnings traders, I would say Alphabet. Well, so Microsoft. Where's Apple? Apple's not this week. Microsoft is not typically a big mover, so I'll probably be directionally neutral on that. Google, on the other hand, is. Google and Amazon both do move.
And also just a word about that. I mean, it's a lot safer. We've talked about, and Papers, the options mechanics wizard here. But remember that if you take any trade ahead of earnings, especially, is 100% gambling. They could have a good report, it goes down. They could have a bad report, it goes up. And unless you go over the expected move that the market makers have priced in, you're not going to see any profits. So, normally we do obviously discourage against that type of behavior. But if you're going in, what something is, you're not going to lose the farm on $100, whatever, then of course,
if you can get a move like
anything like that, is one thing. But it's 100% gambling. You might as well go to the casino. And it's, a lot of people, a lot of traders that have been in it a while, and I'm sure Paper can speak to this, they usually go afterwards, wait for that secondary move, let the IV come down, and then you can kind of take a trade. Because a lot of times after the earnings reports, they continue in 2-3 days, after. So, and we saw that on Tesla, right? It didn't have a good report, and it dropped,
Tesla,
$60 in 3 days or something like that.
Yeah, actually, Tesla, like during the move or during the report, I think was actually up for a while, and then ended up reversing that, right? Like,
Right.
and we saw Netflix too last week, which is probably one to note, right? Like, for a couple different reasons, but Netflix's chart from a technical reason or perspective looked like absolute doo-doo, right? Like it was really bad. But earnings could give a crap about your TA, right? Like your price action does not matter. That literally needs to go and be thrown out the window. The only thing that you can do when it comes to earnings is compare what is the typical move, historical move, versus what what the actual moves or what the implied moves are, right? And if you can find a situation where, look, the options chain is not pricing in enough of a move based on its historical moves, or if it's overpriced, so Meta reports Wednesday after the close, right? Just as an example, Meta is currently trading for $315.70 a share right now. If I look right now at a 315 put, normally on a Monday, that's like at most a couple $100 at most. It's over $1,200 right now. Over $1,200 for a slightly out of the money contract. That's not that's not a good bet, right? Like if that makes sense. And even if I get a move right now, it's probably not going to hold value. On the other hand, if you look, straddle. I got some people like, straddle.
Yeah.
You
can lose on both though. I've had those situations.
Yeah. And I'll tell you right now where I can look at one. I'm looking at Boeing as an example. Reports Wednesday at the open, before the open. This is another example. Yes, volatility is slightly elevated in this week's contracts. So this week, October 22nd, expiring October 27th, going to capture the earnings event. Current IV on that series, we call the expiration. Those are called series. So this week's series, average IV is 59% versus 1 week out at 45%. That's about a 15% IV skew is what we called time skew. That's low. That's not enough.
Yeah. And this is really great information, I think, to the listeners that are coming out and it's kind of really a critical edge, to be honest. How you're looking for inefficiencies in the pricing in the market, and when you find these inefficiencies, that's when you can really take advantage, and it's hard to spot them, but if you do the research and you can find them, and that's when really you're finding the best opportunities for if you are going to now I don't know how you're personally going to play this, I don't know, but where you could potentially get in before, especially if they're not priced correctly. And that doesn't mean that, obviously, of course, with the proper gambling, size for zero, as we say, but those inefficiencies are really key within the Greeks, and then you can really, capitalize them. So it's really cool information that you're sharing here.
Yeah, no, I think, at worst, at the very least, I'd say is, if you're an options trader, price action, we know is a lot of it, but it's not all of it. Let's say it's half the battle, right? That's what I say. The other piece is knowing, like, hey, when can I place a bet and have a better than average payout, right? Where are the odds? Where can I gain an edge, right? And that's in this volatility kind of world. So yeah, I know it's extremely nuanced. But if you do spend time on it, that's where you can actually build an edge on top of price action. And I'll just say right now, yeah, Boeing, underpriced. Underpriced options for sure. Meta, well, that sounds like it's very expensive, and you might expect me to say that that's overpriced. I'm probably not going to say those are overpriced options. They're probably accurately priced. So in a case like Meta, I probably won't do Meta, but maybe like a GE. If GE has an average move of 1.5%, but the options are implying a 4% move, I actually might sell some shorter dated contracts and hedge that short straddle or what have you with some longer dated contracts at the same time instead of having to own the shares, selling covered calls, things like that. It's a little bit more nuanced, but you can build an edge with something called time skew and just using those different series. Again, look at those different series, those different expiration dates, and be like, oh, this one's double the price of the next one, right? Like, I'll just look at Meta really quick. This week's options series, 98% IV right now, but November monthly, 54%. So what's a better bet, right? Like, can I buy cheaper IV contracts and sell expensive contracts against them? I can. And can I create an edge doing that? You can. So anyways, that's what a lot of that is about. But I would be
Good information there.
yeah, a little cautious doing those things. That we call those calendar spreads or time spreads. Typically, you want to do those when things are not going to move that much. So something like a Microsoft, if you have a 7% implied move, but Microsoft only moves 2.5%.
Right. Yeah, no, I know. And that's another great thing to look at, and also, you can obviously the historical data is always going to be there, but if you're around in the markets enough, you'll get a feel for, which ones have the wider ATR that have maybe a potential higher probability of making that bigger move. Tesla, like for me, although it's like that one kills every time. Everyone expected to go like $20 or $40. It never does anything. That one is just like, and I always just know. And also the IV gets so mismatched in the price, because it's always pumped to the gills, so I always stay away from that one. Microsoft, yeah. And what does it move? Apple too is another one. It does usually what?
Yeah, Apple's one. You want to be short. You want to be short options on Apple more often than not, right? So I think that said, for me, my focus this week is going to be everything that's not on this screen, right? So if you see the ticker up here, I'm probably not going to be trading that, at least not actively. So what I could say with increasing IV comes increasing decay, which means that if you do get the price direction right, typically it doesn't hold unless it's like a sustained move. For whatever reason, Tesla actually did do some of this before earnings and started to sell off before, but that was an atypical instance, and it held that move and it just continued to sell off. So I think if you do find an instance like that, that's fine, but probably not something that you want to hold through, if that makes sense. Sorry, hold through overnight. So anyways, maybe interesting to note Dexcom, by the way, if you guys are watching like Abbott and stuff like that, those GLP-1 drugs from Lilly and like Ozempic and stuff like that. Abbott did report and they beat. Dexcom is the next kind of like one to watch in terms of medical devices that are helping diabetes and things like that. That one's already made a bit of a move off the bottom. I do own Dexcom, not a ton of it. Where is it right now? 87. Yeah, it's pretty reasonably priced right now from a fundamental perspective. We'll see how that goes. I'm going to hold it. I'm not going to do anything to that one just yet, but there are some small cap names. As we get into this, we're going to go ahead and start hitting the indices in just a bit and get you guys some trade ideas set up. Before we do that, though, we do have to check in with our friend Miss Cleo.
We need some theme music. I don't have a Halloween.
I know. Oh shoot, I'll ask the guy. Yeah, if we can get some tarot card theme music for sure. I'm gonna put her on blast though, because last week we said we are gonna put her to the test, and let me tell you, I wasn't really that impressed, man. Like she has these monthly readings, and all month long the theme was like, okay, sell the pops kind of thing. But it was a tough read last week for sure. But this on the screen is this week's. So we'll see how she fares. Right, we're gonna put her to the test. Yes, Patrick, it is Miss Cleo time. Here we go. Right, so I'm gonna start. So she does every Sunday or Monday. This comes out. She, by the way, is actually he, if you didn't know. But this person, we're gonna call her Miss Cleo. Gives like a theme card. Theme card is the Two of Clubs or Two of Cups this week, and the description is the sun burned away all of the shadows, but where does that leave us? Right? Looking at this card, it doesn't leave us with much, so she's not really expecting a whole lot. This is an okay situation because it tends not to reveal any negative forces, but it does mute volatility and leaves us wanting more. typically lines up with that seasonal, kind of like when the mega caps all report, we tend to chop. This is lining up so
Right.
far with what my TA
Well,
expectations
well,
would be.
yeah, and I will also say to that point
And this is
that
not a stock trader. Like they're not super active traders. Like,
yeah, this is for entertainment. We, this is a joke that we, like to look at and
yeah,
everything. But it is interesting to find certain confluences. I'd have to tend to agree with the chop theory as well because we made that huge move up,
yeah,
and now we've retraced that complete move. Now, it would be more likely to me to have the markets kind of look for a new level of balance, acceptance in this area, and kind of try to see. Maybe we'll go up a couple days, then we'll come back down, and the market will try to suss itself out. On
yeah,
top of the fact that, as you were mentioning, more than likely the market's going to be hesitant to really do anything with any real size coming into earnings, right? Who wants to reposition themselves in any real way before Apple or, excuse me, Microsoft or Boeing, some of these bigger board names, Amazon, hear their numbers. So
yeah.
those are definitely a couple of other reasons that all lay into that thesis of which may, make it play out.
Yeah. So one-liner summary. She's saying it trends flat. Expect to buy rallies and sell dips. Oh, that sounds backwards to me. I would say expect to sell rallies and buy dips, but she wrote it differently. This is probably because you're not an active trader. So recap, right, is saying, and we begin with the end. Muted week, right? Some chance for hope. Low energy Monday through Wednesday. Okay, kind of running up to that 200 day. Still, that lines up just about right. Right, with early rallies, that would be today, right? That may retrace for a pivot. Thursday and Friday can bring a positive end to the week. So this is, and I'll go through and I'll just actually hit the daily because she does every single day. It's wild, right? But my recap: low energy bounce, then chop for Monday. Tuesday, early pause, then back half impulse. Wednesday, chop, likely to the downside or inverse, whatever that Monday, Tuesday was. Thursday, she says inverse the open. And Friday is a trend day. So yeah, I think that's where it is. Here's the actual. You guys are gonna have to screenshot this if you want them. Today, what is it? Finer things today. That little pentacles thing was like we're distracted, leaving us distracted and unmotivated. Card takes us near the end of a move, but it acts bipolar. Tuesday, a break the streak of Tuesday, replace them with rather mundane low energy fire card. I think Wednesday was the Clifford the Big Red Dog. Was that Wednesday or Friday? I don't remember. Wednesday says blah. We're getting a dose of twos this week. That means chop. Stalemate. Thursday, major move gives us strength, which means that selling should be supported, whatever that means. I don't know. It looks like beginning of a trend that may be like reverse the open. And then Friday is likely a big fat trend day. But screenshot that if you want it. Couldn't tell you. I'm
There
not.
you go.
I'm not really relying on that. I just think it's like wild to me how accurate she has been as of late. Blows my mind. So here's my view really quick. I'm actually gonna clean this up just slightly. See if I can get this a little cleaned up for you. So every morning, every day, I come into a view similar to this. Well, honestly, exactly this right now. This is my first view, right? So if you don't have something like this, that's fine. But it's essentially major broader indices and a couple tells for me. So the Dixie bottom left here, TLT second to the left on the bottom. These are the ones that have been giving us kind of like that confirmation trend when dollars like trending higher. That was not really good for like foreign investment, things like that. If the dollar does get, and by the way, we're at max correlation for the Dixie to the equity market. So I would say at that point, it's not like I don't expect to have like a full 1-to-1 correlation. These things go in and out. But right now, if we get below that 102 kind of level, below 104, that would be ideal. The lower the dollar goes, the more attractive our equity market becomes to foreign investments. So new money potentially coming in. That's just another thing to note. TLT hitting that 5% on the 10-year. If you want to see what it's the US US10Y. That is the 10-year yield, not the bond. 5.019. We tagged it. And to get that far back, where have we been? Yeah. Oh, there was a gap. Did we just fill a gap? We filled a gap from 2007. But that's not, I mean, this is what we're used to, right? Like all down here. But when you start to see, where are we coming from? I mean, would have never really guessed that the yield was way up here.
What was that? The 80s? That must have been
Yeah,
the
yeah,
80s.
yeah. This is 80s, right? This is 90s,
Hard to see the bottom.
90s right here, up to like 8%. I had no idea, right? And here's 2000s in like the 6-7%. So, yeah, it's pulling back. Man, I really hope we don't deal with that. But our generation, this current generation traders really hasn't had to deal with this type of rate situation. So we'll
Yeah.
have to see how it's going. Looks like SPY's bouncing off its 200. So let's go ahead and take a look at that really quick. So usually I use a 30-minute chart, just gives me a little bit better view. These orange boxes, by the way, this is an average week's range. And I'll usually set it from the open. And so from the opening trade today, let's say, call it right here, an average week's range. And I have essentially the only levels that I have on these charts are going to be non-farm payroll levels, or my fundamental levels that create my fundamental events that create my technical levels. All week last week, I was looking at this 423-ish level to act as support. I think you guys just saw that where these kind of like circles were. I can see this pretty clearly. Let me just make this a little bit bigger. I can see this pretty clearly on a 30-minute chart. Where did buyers step in, right? So this was September 27th. They stepped in a big way right here at this order block, right? Happens to be a June non-farm payroll fundamental level that takes us all the way back here. So essentially pricing the market back to June. And we want to know, the market wants to decide, is that accurate or not, right? Is that appropriate? So they stepped in here. They got a little bit flustered, but actually ended up defending right around 420, which is our October NFP candle right here, 420.60 up to 431. So what we know is that if we were trending below 420, we're thinking short. That's it, just thinking short. End of story. But we opened below. We didn't close. We're not going to close below. That's what's true right now. I'm going to click one thing really quick, and that's going to throw some moving averages on my chart. And let me see if I can clean this up just a little bit. So you guys see this. So this red line, that's a 200-day simple moving average. This is like institutional type level. Luck on the daily, so it doesn't move. And that's exactly what we're bouncing up off of. So what I'd say is that's also where we bounced on prior. And I'm just going to move this back to a spot where we've traded around it. When I say we get choppy around a 200-day moving average, this is choppy, right? And that's exactly what this is, right? So if you're thinking about that, oops, goodness, what is that?
Where's the?
Alt. I zoomed in, so I can't see that. I can't get my.
I'm trying to look for the link. I want to.
I have it. You have to have it time frame, right? So I have a handful of moving averages, but it's just MA that I use, time frame 1 day, and that's it, right? I'm gonna hide some of these others just so they don't get in your way.
Oh, by the way, I love this graphic you had. It was
the Halloween costume.
It was great.
Yeah,
I like how you changed it up and you had a little bag full.
Yeah, I love it. So this is how choppy we get, right? And normally, if you're trading with us, most of the time, look, we can bounce up off it. It's not very long lived first time, right? Especially this was a downward sloping moving average that was starting to base out, bounce hard, but it doesn't always hold, right? So if I want to go long, really, I'd rather wait for this kind of like polarity to move, or at least get really stuck in here. And I want to wait for these lows to hit in, come in, and then enter long on the higher low after starting to break structure here. That's ideal. It's very hard to time. It's really tough, but expect this kind of like bounce, whoosh down, bounce right back up. And what is this? This is a full month that the S&P traded right around the 200-day. it can, if you're really far away from it, right, and you tag it here, it can act like that's, again, this is that polarity. If it's really far, you get this tag and then short on lower highs below. But again, this is how it acts currently, trending up, but expect this kind of chop around it all the time. Super typical, and major consolidation. So again, very typical of earnings season. Just be very weary of, like, hey, look, this is the type of spot that we're coming up to. But it's usually, historically speaking, a decent spot to start to get long. And if you have like a heavy like dip below, those are, statistically speaking, good spots. But we just kind of, broke back up. This is that last 200-day test. This is back to March, of 2023. So here we are testing this net. I can take this down. This is played out. Do you have any level, Sharky, that you're looking at? Because I can just kind of move forward, but
yeah, in 1 second, let me just.
So if I'm just using my NFP stuff, level, amazing how this stuff always turns out, right? We reclaimed that 420.60. Next stop was going to be 422.62, which was really the spot that I was looking to go long Friday, which we did hit, but ended up rejecting below a little violently, shockingly to me. So here we are back to that level. This looks very similar to what we were talking about before, right in here. Typical. So right now this dip is being bought. That's what's true. If we continue up to the upside, an average week's range will take us to 428.78, 428.78 to the penny. Not a dime more, not a penny more, not a nickel more. That is a average week's range. To me, that is also a huge fundamental level. Check this out, right? We look at a 30-minute candle. I'm just gonna grab. You know what? I'm just using this box, but that's fine. We can just see this. How strong do you think this level is going to be? It's going to be pretty strong, right? And it's not that long ago, right? So here also this level right back here. So can we get there? Yeah, we can. This is a serious level. If I can get my whatever. But 428.78, that is an average week's range. That's major overhead supply. You can just draw it like this. If we extend, sure, right? It's going to be, again, level to level. You could extend to 430, but I wouldn't really be looking to press bets anything really over that in terms of indices. If we reverse, right, and we go to the downside, I'm going to take this again. I don't think we get all the way down there, but 413.67 is going to be like my hard line in the sand. To me, I hope we don't get there. But if we start trending below today's open, or below 40.20 spot 60, if we're trading below 420 spot 60, I am looking for 413.67 on SPY. How does that line up to the Qs? I don't know. And that would look like a break below this 200-day retest, and then a quick flush like that, and then full stop for me. Otherwise, we are looking like this holds. If we get a little break tomorrow and an extension, full stop right there. Not huge moves, but if depending on how fast they play out, could be decent ones.
Yeah, I think that retest up there by the June MP, that makes potential sense.
Yeah,
and that's about a 50% retracement of the total downside range.
Good call. So let's do that. So if I measure, that is exactly.
Yeah, I'm just eyeballing it, but it seems to me, yeah.
Yeah, if I just go from like this swing high to swing low, 50% retracement, 428 spot 12.
Yeah.
So right in this area, I'd be looking for upside targets at most, for continuations if I'm over at least today's high, and then flat and see, and then wait for the next trade to come, right? So the next trade might be a retracement, it might be an extension, I don't know, but I would just go level to level.
Yeah, as always. But this one's going to be interesting too. I think that today's close will be really telling of maybe what the next step is going to be for the next 2 or 3 days, because if this is about a 25% retracement, so if we close above
Yeah.
the 25% retracement, then we'll be looking probably for that 50 or close to it at least.
Yeah.
Obviously we've got so many headwinds, and nothing hits to the penny. But if we close back under, then it'd be more likely, in my opinion, to at least make a try for the Monday lows, sometime in the week. So it'll be very interesting to see where we close today. And I'm kind of with you. I don't 100% trust this move. I'm still thinking this is going to be more of a chop day. So wouldn't surprise me if we just ran back and came back to SPY 421, by the end of the
Yeah.
day, or 421.75, somewhere back in that area. Because we tried to break out of this range that we've been trading in right here when we popped up to that 424, 50, 40 area. Hit a big level there. But if we get over that, then we could see a little bit more upside. But I just kind of think that we're just Monday is usually range day. We're trying to set the tone. So it's always good to just temper the expectations.
Yeah, for sure. And I mean, if we do get up there, I mean, this is a ton of this is a big battle zone in this level for SPY anyways. We'll know if we get above, but it's not a spot that I really want to be playing with a whole lot. Just look at this overhead supply if we get there. It'll be cool, to catch and ride maybe, but you say this, new money shorts not that great, new money longs not that great in when you're way into overhead supply. Side note, so Qs have been pretty muted this week. Actually, the last couple weeks. So right now we are actually starting to break structure on the Qs. I think we had an equal low, double bottom on the Qs. Very notable to me. I kind of like this, right? So Qs with some of the Mag 7 coming in, we'll know very quickly, right? Like right off this 350 level, and immediately bouncing today right off the lows. An average week's range does take us to 368. I'd be a little hesitant on the Qs in general, in terms of measuring an average week's range, because they're so heavily weighted to the Mag 7 that are going to be reporting this week. So your TA can kind of go out the window on this one, because it's going to be very dependent on a handful of names this week, namely, like, again, Meta, Alphabet, and whoever else we have reporting. Forgot who it was again, but Amazon. Yeah. Between Microsoft, Alphabet, Meta, and Amazon, it's going to be hard. Those are going to move your NQ for the most part this week. But again, if this trend continues with the dollar falling off and yields coming back down in a heavy, pretty strong way, that's not bad. The one sector to me that's like, okay, you have broken all levels. You are not looking good. You look like absolute death. That is the Russell, right? And this is kind of weird. So here's a weekly chart on the Russell, and it just looks gross, right? But we are coming into a pretty heavy level that has been bought up in the past, and if some of these earnings reports can save us, this has your highest beta upside. And I do have a couple of charts just looking at them that I have things hitting 52-week or all-time lows this morning with pretty strong bounces. Kind of interesting for sure. So like, what was one last week? We were on a space together. I think it was with Mikey, and there was like RH had new all-time low. Oops, no, oh well. I'm just gonna go. This is my analytics or analyst view, multi-time frame analysis view. I got J&J and Apple alerts, so we'll look at those in a little bit. But yeah, RH hit a pretty significant low down here and looks like it's starting to bounce. I don't know. I grabbed some equity. We shall see. This one looks like it's good for at least a small bounce. This is all over the place, but just from an equity perspective, it's going to be like IWM, where like if it looked like the bottom was kind of falling out and then it gets saved here, that's going to be a really good entry. We'll see. It's an easy stop below call it 220. So, low risk, high reward equity setup on this guy, and I don't believe they have earnings anytime soon. Yeah, you don't have earnings till early December, so you're in the clear, at least for a oversold. Did I say oversold? For a bounce, right? A couple other ones. So I had a small cap name. When was the last time you saw Chewy, dude?
It's been
CHW.
a while. I
Yeah.
don't trade it because the liquidity sinks
Well, so I
on
looked
the
at it
options at
today,
least.
and liquidity again, normally junky, but I got an alert 52-week or low, like all-time low, and lo and behold, it starts bouncing. Like as I got it. So we'll see how this goes. But kind of like double bottoming here. I mean, talk about bottom fishing. It is what it is. But if stuff like this gets a bounce, this is all over the IWM. Those could be some pretty like wild squeeze plays for sure. So I just got an alert on J&J. So what I also want to talk about was some kind of sector rotations, right? So I'll typically go into a view that's similar, that's basically this, and see who's trending up, down, sideways, whatever, right? So over the last month, I mean, these guys are all red, but who's been beaten up the most? Real estate, utilities beaten up the most, financials beaten up, consumer discretionary. That's the last month. So these guys are down like 10% last quarter. Consumer discretionary just destroyed. Industrials, materials, pretty bad. 5-day trend, things start to turn around just a little bit, right? Consumer staples getting a little bit of love and some energy. And what I'm looking for is like, are they kind of starting to rotate? Are they so bad that all of a sudden they start to look good, right? Energy was looking really good. So now all of a sudden not looking great. Looks like a lot of money flowing out of it and money going into communications and a little bit of that discretionary too, right? So I don't have healthcare. Here you go. It's not exactly the one I wanted to look at, but healthcare was defensive. So if money starts flowing into like a Microsoft or a Meta or an Amazon, things like that, I'm going to start looking at some of these defensive names, possibly short. So you guys might know I was pretty short Pfizer last week, still kind of short. J&J was another one that's on deck, right? This looks to me very I keep using this word distributionary, but J&J loses 151. This is not looking good for them for sure. So I'm thinking this guy looks like an easy setup short, just in the short term for this week. Honestly, if this level falls out 150, it's going to be a nice, clean trade to the downside. I think this was pretty low IV. I was looking at the 150s for this week.
Ooh.
They're trading a little bit.
I gotta go. Paper. I gotta predict the gram thing.
Oh, do we have a? Okay, yeah, no worries. You want to like any like major watches that you're looking at so far this week?
No, I usually trade the indices, so I'm looking to see how we close within the 25% range. Looks like we're getting a little bit of selling coming in here. I got juked out of a short a couple of minutes ago, which I'm kind of upset about now. But let's see. I really want to see the 2440 is definitely going to be 42440. I'm going to be watching to see about that continuation, and if that happens, then we can look for a little bit more upside into the market. Now these are kind of for day trading levels I'm talking about. I think we were perfectly in confluence for that bigger picture, possible retracement area, but like we always say, we take it level to level. So first, the bulls definitely got a lot of work to do. We got to get over that 424, 40, 50. Then we can start working into the 426, 30s. And then over that, we can start talking about some more upside. But it's an uphill battle. Yeah. And we just take it level to level. So,
yeah. All right, man. Watch
all right. I'll see you later. All right.
Yeah. Watch it.
Thanks for having me.
Now. All right, man. Yeah, so I'd say just again, thanks again, Sharky. Coming into these 200-day moving averages, super chop in general. Yeah, that's exactly what we were looking at. Boeing, this is a wild one, right? So if you're familiar with broadening ranges at all, Boeing, this prior consolidation, sorry for these lines, this is at the very low end of a broadening range. And I had like 170s-ish for the spot to kind of get long. I think this is pretty close to good enough. I was looking at these options, and man, I'll just say look, number one, the stock's been pretty thrown around, but they're not too bad. So I actually think I might run some kind of a straddle on this one. Right now I'll just sit in some 135s, 185s, just a short term. And kind of like see how that goes, right? Like I might grab some 180s just before and run with that kind of a straddle, but it's possible that you can actually look at something a little bit longer dated on this, because the IV is really, really not that expensive. Very, very underpriced on this guy right now. At a short on, believe it or not, Lilly, and still do. We'll see. This is kind of like that Nvidia pre-earnings was like, look, something, and these guys have pre-earnings coming up at the beginning of November, so like a week or so ahead. My thought here is like, look, if you're long, you've had a huge win. You might see people start taking profit as you get closer to earnings season, and that's what I was looking at for Nvidia, or part of what I was looking at for Nvidia. Still looking at for Nvidia too, although we have had a bit of a move down. So for right now, I grabbed a short on Nvidia, but I probably should be closing. Depends on where she closes today. Right now, you're right into a little bit of overhead supply right here, which could lock in a lower high. But again, it was just, let's see, what's this? Grab a fib. Yeah, it could get up to 440 again. So I don't want to hang around too long. I made a bunch of cash on this guy short last week. So just kind of like a small ad, and I'll probably keep it out. Tesla. So let's see. I'm short on Tesla, looking for, okay. So Tesla was coming up into 200-week moving average, by the way. So that's this purple line right here. This is a 200-week moving average. Very, very strong support level, just in general. Couple other things of confluence on this guy, and I'll just move this to the daily. It was too big. So we have overhead supply, but here's this fib right here. Swing low to swing high. This is where bulls are going to step in. So if you're short Tesla here, I would just be very cautious that, look, anybody that's bullish Tesla, where they stepped in is exactly where they should have stepped in. 202 was a 6.5, 618 retracement right here. This is, if you lose that level, then I think so, yeah. But for now, just you want to be aware, this is essentially where they stepped in before. You have a ton of demand for Tesla right in here. Here, I can draw this over. All of this. So I see the 185 to the downside, right? That's what you're looking for. 175, 185. Yeah, I see it. What I would say is I'd want to trigger, right? So what is the trigger going to have to look like on that? I think number one, if it gets over to 17, you really want to be cautious of closing out. Over 225, to me, 225 is the next upside target. And again, this is a big move. Let's just go this swing high to swing low, right here. So this is going to be your golden pocket, right? Or golden zone. If you are looking for like a half gap pop to bounce, and then here's your golden pocket. That was golden zone. This is your golden pocket right in 235. So if you're a bull, I'd be looking for those two targets, 225, 230, 235 maybe. And you're definitely going to run into this order block right here. This guy. So that might be a better entry short if I was going to be bearish on Tesla. Other than that, I would look at this guy. So here's this last 212 kind of order block, that last low. If you're trending below that, like if you get a close below this, I think you're still possibly in play, but where you're bouncing right now is above it. So today, it's a tough one. If you get this kind of thing, I would be looking long, and it wouldn't be until like tomorrow. If I get this kind of entry, something like that, then yeah, maybe I could look short, but I really absolutely have to break below this morning's low at 202.50. So 200, that's going to be a psychological level, very tough one. It might be a short-lived trade, like a couple minutes if you see it and it starts playing out. But for now, yeah, I think if you're holding over 212, you're probably stabilizing. Tesla might be on like one of those 3-day breathers for a lot of people to trade, right? So I wouldn't necessarily expect huge moves out of Tesla. I mean, that's a decent move today, but I wouldn't necessarily expect giant moves out of Tesla. Or if I do, then maybe like 1-2 days and then leave it for a bit. So, Mozilla's asking about PFE. Pfizer is kind of tough, right? So it bounced right up to a critical zone, critical to me. So this is right into that overhead supply. I'm going to give it a day. So here's where Pfizer is. If it as long as it closes below 31.10, give or take, I'm fine. It looks like it's getting bought up a little bit. It's a small position for me. It's cheap cons. But yeah, honestly, I really want to see this closing below 30.80 to really think that that's going to go. Otherwise, this is more of like, oh, we might want to close this pretty quickly. I think they're down pretty heavily anyways. All right. So I think that's it. Tesla, by the way, right now, Tesla is sitting at the 200-day on its 200-day, this red line here. So expect some chop too. I'd like to see that trending well below the 200-day, maybe even 200-week at 205, really before taking some serious shorts. Yeah, December. I mean, so if you're holding December puts, it's a tough one. Yeah, I think that's a style thing. If you like to buy a lot of time, I might sell something against that, but I don't want to overcomplicate a trade for you. If that makes sense. Yeah. All right. Appreciate you, man. For sure. Those are just your levels, right? So as long as you have, like, you can have a thesis, but you want to have a trigger also. So like, I think this is going to happen, right? What's most important is that you have a trigger and that you constantly have triggers, like continuing to trigger. Patrick wants coin, right? So I saw coin this morning and I was thinking, so geopolitical risk, we've been having gold fly. Let's just, by the way, so gold futures. And I'm looking at gold because it was two things going at once. Gold and Bitcoin were both rallying. Bitcoin has the ETF approval in the works, which I do think is going to go. It's just, we'll see. Gold should be kind of like flatlining, stabilizing out here. So I wouldn't be pressing any major bets. If I get a pullback to this one, about the 200-day on gold, got 1950 on GC. What is this on GLD? Ooh. If you get one of those big red days to like 180, even, yeah, I mean, it doesn't have to be big. 181 on gold, I'd actually be looking to reload, if that makes sense. But I'm not going to press this bet here now. And I'm looking at that because Bitcoin was doing very similar. Today's a huge day on Bitcoin. Oh my God. Is that real life? Okay. Bitcoin looks pretty... it looks bullish short term, but then I zoom out and I'm like, oh, it's got a ton of overhead supply here. That's a tough spot. That is a really tough spot because you got to know the bears are going to be sitting there waiting in the wind. So right about the 50% retracement. That's a rough one, man. I would wait till that's like basing out. Coin actually looked okay. So it's basing here. Big old consolidation as it does right in this spot. $80 is tough. What I'd say is we're going to know if this guy goes, right? So I think in the short term, you're like target acquired. If it continues over, 82 would be the next target. And this is that consolidation. So coin has been chopping pretty regularly. And I know it doesn't look like a lot on this chart, but like up and down 20% for a very long time. But I think at this point, yeah, it's probably done, at least for today. But yeah, you tag that very low end of that that base, right? So whenever coin gets to that level, here, I'll show you where it is. So remember, I like that 30-minute chart. You can really see it right here. Here's that order block, 73.30, right? Big old buyers stepping in. You see it all right in this area. Under 73.50, a lot of buy side coming in, or buyers coming in. It wouldn't be super short unless we're breaking 70, right? So where do they all get stepped out? What I'm looking at on this chart is that, look, people are getting long between 73.50 and 70. If it loses 70, everybody that bought in this little zone is probably going to get stopped out. And until then, it looks like they're kind of just trading this range up to here and like building into a position, if that makes sense. So 82 is like max upside on this in the near term. But again, it makes this whole round trip move in like a day. Sometimes it's wild. Okay, question. Outside of subject, starting trade 500 account, bad idea. Where should I start with capital? Love the avatar, number one piece. Number two, it really depends. Like you have to stick to very low cost tickers or maybe just SPY. Sometimes it's better just to start with a paper trading account for sure. I would definitely recommend starting with a paper trading account, just because like most trades are going to be at least $100, if not more, and that's going to be like 20% of that account, which is a bit heavy. So I would be very cautious too. My thoughts about Qs, not even close to daily. Qs, not even close to the daily 200 move. Where is the Qs 200 day? I see what you're saying. It's not about that per se. It's like, are they breaking levels one way or the other? What's true is that the Qs have been significantly stronger than everything else this year. I think NASDAQ in general for the year is up like double what the S&P is. And that's because of that like Mag 7, if you will. If the Qs lose 350, then yeah, it could be kind of rough. And it's been in this basically consolidation zone since, what is this, August? I mean, how long have the Qs been trading right here? It's a really long time. Up, down. And honestly, I'm seeing just a series of lower highs, so it's tough. If we're gonna break out, it's about to be probably right now, and maybe it gets us to another like seasonal kind of like hopefully Santa Claus rally. That's about 3 months of consolidation that it looks like we've been sitting at this level. So it's a nice base to have formed. If we can hold that base, it's really constructive. But it might just be like choppy, right? Like that. And then, to your point, the 200 moving average it's not even close to where it is. When you get that 200-day moving average a little bit closer, because it is trending up, it might start to look like this at that point in time. And then you can get either a break below, right, like this, and then maybe an extension to the upside. That would be very typical, and that looks like a very normal chart if I just drew it out like that for now. But in general, like the moving averages are just like, what's the broader trend? All you're really looking for is what's the direction? Like, what's the angle of slope, right? 200-day moving average here is sloping upward. The other two that I have up here are the 50 and the 20-day moving average. They're starting to roll over a little bit, which if this didn't have earnings, you could say, okay, it should start kind of teetering towards that 200-day moving average in general, like SPY started to do, right? So super similar. When the 50 and the 20 kind of like start to slope down, you do tend to see it get towards that 200-day, and then you have your next trade kind of start to show up. But I think, what is DRV? Oh, that's the real estate ETF. I think it's a watch, right? I don't actually. Is that real? Well, home builders tend to like, geez, I wasn't expecting to see this chart look so bullish. Sorry, caught me on that one. XHB is the home builders, and these guys tend to lead a little bit more. So I would look at this one. This is a bit extended to the downside, and I was okay taking a snipe, or at least a small shot. I wouldn't say snipe, just taking a small shot on RH, just because it was so low, and I think this is very similar. So I want to watch this XHB sector. Real estate's a little bit different. I think, yeah, real estate was one. They're way. Those look like they have gotten away from me, so I might have just missed that trade right now. So I'm just watching SPY. Things look like they're kind of curling over as we speak. But I would just keep these on watch. This does not look super constructive, but I don't know that I would be net short. So this is kind of in a spot where I'd be waiting for this to start turning around before I really want to start getting long on things. Am I using TD to trade or TradingView? This is TOS, Thinkorswim, TD Ameritrade for sure. I think we're good, you guys. Rates, yes. I think rates, I hope rates are chill. We'll see. But big week ahead, a lot of earnings to go. Again, I think, you know, a lot of stuff. So Intel, by the way, some typical straddles where you can actually buy. Intel tends to be a cheap earnings one that does move a little bit. Some of these will do like directional calendars, but overall, just look at the series, like what expiration you're looking at. Is it more expensive? How much more expensive? Meta, I wouldn't touch with a 10-foot pole, but it does tend to move quite a bit. I think Visa is going to be a market tell in terms of rates in general. But yeah, just be on deck, you know, for anything. A lot of stuff could happen. It's going to be this Powell speech, really. So Powell's speech Wednesday after the market closes. That's going to be a big one. And then Thursday, GDP followed right behind it by PCE. So things can look good. Monday tends to be like the most bullish day of the week. Hopefully this doesn't top us out. We'll see. But all right, guys, I think that is it for me. Let me just check it. Yes, you guys rock. I sometimes struggle time to time, so borrow. Oh yeah, no, I understand what you're saying. But yeah, check us out in the servers. We will see you there. And this little sell-off on SPY is exactly what you would expect around a 200-day moving average. So just be aware. All right, guys. Adios.